A weekly close below the most important swing low in BTC, turning higher time frame market structure into bearish. Does this now mean it's over for our longs? What should we expect in the coming weeks and days? All of that in today's episode. Let's go. So guys, the weekly close is here. We closed below the swing low I have marked out here, turning market structure on the weekly officially bearish. And we talked about this. This is really the line in the sand. This means now market structure is technically bearish, but this does not mean we cannot bounce from here. This is a very important distinction because just because market structure turns bearish higher time frame does not mean we cannot see a major bounce. But with market structure now turning bearish, we officially trade against the trend. This is important because this means we should be very careful with sizing. We should know our local targets and set realistic targets, but we still can be long. So BTC, I'm glad I'm short. I do not have a long. I have also a super local lower time frame short here, simply because there was huge absorption and I used those profits once again to re-add it into my swing long ideas. Technically momentum shifted bullish, but we can easily retest this trend line or even go lower. I marked out the 0.5 here because, as I said before, V-shape, higher time frame V-shapes are very rare, and so I expect a rejection from here, and the rejection could be aggressive percentage wise, and I can use those profits to reallocate into longs. So ETH still long. I figured out what changed my average. I talked about this in the last video, and there is a function if you choose a new asset, and I never used USDC assets, USDC pairs, and it's called price protection, and it simply changes the average without like executing any orders. So it's super weird, it's super stealth, and it moved my average a bit higher, and it even TP'd and opened a new position without even showing me that. So it's a very weird function, and I don't see a big advantage in using it, so I turned it off, brought my average a bit higher and on lower size, but I'm gonna re-add those automatic profits more or less back into long ideas here. Also on ADA, still long, still the same idea, still at 0.75% risk. Let's see what the day brings and if I maybe want to add. Yeah, and if you look at the whole picture, and let's stay on this lower time frame chart here in BTC, because we always talk about key levels and everybody's talking about key levels, and I don't think that many people understand what a key level really is, because a key level is not a block or not something fancy or special, and it's not something like you can put in the textbook and it will always be the same. No, a key level is simply a level that creates liquidity, which means, for example, a round number, a psychological number can be a key level as well. And see how price interacts with the $70,000 level. And it's not because 70,000 is an important number, it's simply because it's a psychological round number, which makes it kind of important, but only because people look at that. From the order book perspective, it doesn't really mean anything besides that people like to trade round numbers. So keep that in mind. And over the weekend, we have now seen 70K been taken several times. We lose it, we take it, we lose it, which creates for retail, which is not looking at charts, the impression that, oh yeah, we broke 70K. Oh no, we lost it. Oh yeah, we broke it. Oh no, we lost it. And over the weekend, there was pretty much no volatility. And we were above 70K. On ETH, we were and still are above 2K, which gives retail a very bullish impression because 2K has been reclaimed. So those people that panic sold into the low below 2K, they get scared or they fear missing out if ETH breaks 2K again, because now we reclaim this most important level. We know that it's not that. We know how to really look at those levels. And it's not coincidence that like we had a slow weekend with prices above those levels, because this made probably a lot of people FOMO back in. And it's also no coincidence that we start losing this area again. So that said, let's have also a look at majors here. We have also a weekly close on tether dominance, which created this huge absorption wick. So the wick is basically bigger than the whole candle body. It was an above average volume, and it's at extreme premium at the range high. It's no guarantee that this will continue lower from here, but it's definitely a good sign. It's definitely a strong absorption sign, which could lead to further downside from here on. And it might be the first sign. That said, we also turned this bearish weekly breaker block here into a bullish one, and it's acting now as support pretty much. This one not really. I would not trade this, but keep this in mind. So we might go down here, bounce from here, because if it's a higher time frame reversal, we probably spend another week or two here. So we have time. Relax. It's very uncommon that we see huge V-shaped reversals within 2 or 3 days. We spent now 1 week up here. Now we might spend another week, and then we will see which kind of move unfolds. So we could also simply just lose all those key levels. Be prepared for that as well. That's why we manage risk. That's why we not just blindly buy and hope for the best because we have some kind of bias. No, we create trading plans, we have invalidations, we manage our risk, and we define our risk. This is important stuff. Even on higher time from optimal levels, you might want to risk a bit more if you're confident in those areas and levels, but in general, the invalidation should be clear before every single trade. So now we talked about the absorption and the weekly close on tether dominance. We have also an absorption wick at USDCD, yet it's basically in the middle of nowhere. So I did not expect a big reaction from here. I thought we will go up here, but we didn't. So let's see what happens here, because as said, structurally speaking, we have not even like filled this full FVG. So maybe there's something coming up. Bitcoin dominance still continues sideways. Levels are clear. We are basically within this range here. ETH dominance still in the weekly breaker block. ETH BTC still in the weekly breaker block, which tells us that being long ETH might not be the worst choice, which also maybe means being long altcoins might not be the worst choice. If you look at total is basically sitting in the demand. You can refine it however you want. Interesting is that we did not really close the weekly below the swing low. We did close below the 0.5, which is also often a sign that we are going to visit even lower areas of this range, but not without pullbacks. Usually we do not go down in a straight line, same as we do not go up in a straight line. Usually you have sometimes moments like this, and this could be one of those moments that all bullish levels fail and the liquidation just continues to the downside, but there are still tradable bounces. So we hit this demand here. This demand led to a bullish reaction. We retested it here. We retraced the full move and even more. And we are now in this demand, which also favors being on the buy side crypto locally here. Total 2, same story. You can refine it. You can do whatever you want. In the end, this is all demand. And so it also acts as confluence to be long. Then a quick look at the stock market. The S&P 500 still ranging here, still creating a lower high right now. So let's see how this develops. And the Nasdaq still here at the support and resistance level we talked about, still retesting it from the lows, which is also still a sign of risk off. And so should we start creating higher highs? This is invalidated, but as long as we retest it from the lows, I'm still somewhat cautious, and I'm still somewhat cautious with my crypto longs. US Open is right now, by the way. Let's see how this day develops. Usually volatility comes around US times right now, so the whole day was pretty slow, nothing really of significance. Let's see if there will be a big news event, a big move, lots of volatility. But don't get caught up in lower time frame noise. If you're a higher time frame swing trader, if your main ideas are higher time frame swing ideas, things that happen during one day are usually not that important. I mean, obviously, if the day is a 15% move, it's important for your swing positions as well. But now we have, for example, a sell-off. Don't get caught up in those kind of things because it's not really something. Let the market show his hand before you act, and know that around certain times during the day, manipulation happens, liquidity is created, all those things, and this can super easy be retraced. So don't get lost in lower time frame noise. You have a higher time frame plan. If you trade lower time frame and if you can separate those ideas, that's great, but really make sure to separate those ideas. And for your swing ideas, going below the daily doesn't make a lot of sense. As said, longs are somewhat favorable right now. Should we get a retrace of this move? Should we fill some wicks here? Also looking at XRP, should we get retests of those areas and you haven't built real exposure now? This might be your chance, but still all those levels could fail. Manage your risk. Don't go in blindly. Don't think this is something special. Every level can fail. We are trading probabilities. The whole market is just a realm of probabilities. Make sure all your positions are built accordingly, and this means proper risk management. There is nothing like the perfect level that cannot fail. So stay safe. Have a great week ahead. Bye guys.